Okay, in this video, we're going to get an introduction to some of the forms, particularly Form 1040. To start off, it's important to know that to do taxes, we can go to multiple different online sites such as H&R Block or TurboTax, and we can use their systems to do our taxes. However, sometimes these online sources are inefficient to use because we may not learn about how to make tax strategies that can be to our advantage. By understanding the calculation of the taxes, we can then develop strategies that will help us maximize our efficiency use of our assets. And so what I want to do in this video is to introduce you to the most important form in the tax system, which is the 1040 form. Now, each form that is used in filing a tax return is identified with a particular number. And so this particular one is 1040. And the 1040 form is essentially the summary of your entire tax situation. So every tax return that is turned in to the IRS is in some way, shape, or form using a Form 1040 to demonstrate the summary of their tax situation. Attached to the 1040 will be additional forms that explain further details of specific areas within a tax return. Now, this particular document here is an instruction booklet for the Form 1040. And so as people fill out their 1040, they to summarize their tax return, they can use this booklet for the instructions of how to fill out the 1040. Now, it's important to know that each instruction booklet will pertain to a specific form, so there's not necessarily one booklet that will give you all of the instructions of all of the forms. So it's important you pay attention to that if you're filling out your own tax return. Now, the Form 1040, although it is a summary of your overall tax situation, it has four main types. First of all, there is the normal Form 1040, which looks like this. It is a two-page document, and it is a complex form in which we have to follow a basic formula to calculate our tax return. So this is the basic formula here on the left of calculating your tax return, and that is followed on the Form 1040. We start with our gross income, and that is at the very beginning here. However, you will notice that there is stuff at the top of the form. This area up here basically gathers your personal information and then gets your filing status, which is an indication of the household type that you have, whether you are filing a single, married filing joint, married filing separate, or another situation such as head of household or a qualifying widower. The next item is exemptions, and this is where you identify the size of your household. So, such as yourself, your spouse, and then your children or other people that live in your home or that you provide for. They are known as your dependents. Then we get into this calculation that we go through. Before we jump into the details of this, I want to share with you the other three forms of Form 1040 that there are. This one in particular is used primarily by a lot of taxpayers that have complex tax returns. However, the second 1040 tax form is called 1040A. It is essentially the next step down in complexity of the 1040. Then we also have a 1040EZ, which is another step down, and this particular one is only one page in the form. And you'll notice that it says at the top, income tax return for single and joint filers with no dependents. That basically means that you have to be single or filing your return joint with a spouse, and that you have to have no dependents, no children or no other people that you are providing for throughout the year. So there's different levels of Form 1040, and the last one is Form 1040X, which is what we call an amended tax return. For the sake of this video, we will not be going into the details of 1040X, but just understand that there are those four types of 1040. The general 1040, which is the most complex, the 1040A, which is one step down, the 1040EZ, which is the easiest form for the most simplistic situations, and then the 1040X for someone has to amend a tax return. Now, if this 1040 is a summary of your overall tax situation, let's go through this together and get a better picture of how this is put together. So on the left, we have the tax equation that we're looking at, and on the right, we have the form, which is a two-page form that gives us a whole bunch of line items to follow to calculate our actual taxes that we owe or taxes that the government may need to give back to us if we have overpaid. So after we have identified our exemption items, such as our dependents and our spouse and ourselves, for our household size, we then look into identifying our income. Now, our income is essentially all of the money that we're earning from all different types of sources, such as, for example, on line 7, it's wages and salaries, or even tips that you might receive from a particular job. You can get some interest from investments that you earn that might be taxable. There are many different types and sources that you can get income from. So this is where we identify our gross income, and we total that up on line 22. The next item is we adjust for our gross income by calculating what is called adjusted gross income. These line items are items that allow us to subtract from our total income, and we come up with what's called our adjusted gross income on line 37. These items are also known as above the line deductions, and so the adjusted gross income line is what we call the line. So if you hear someone say that they did some deductions above the line, you would know that they would be taking their total income and subtracting those things from their total income to get to their adjusted gross income. Once we calculate the adjusted gross income, we then transfer that from the first page to the second page. The very top of the second page of the 1040, we will also record that same number for our adjusted gross income. Then what we do is we start subtracting what we call a standard deduction or an itemized deduction. What that means is we have the choice to deduct a standard number that is given to us, or to deduct what we think we might be able to calculate as a deduction. Most tax returns will subtract the standard deduction, but a lot of people will itemize their deductions because they feel that they can identify specific expenses that they had that will create a larger deduction than what the standard is just generally given. So on line 40, right here, is where we identify our standard deduction or our itemized deduction. You will notice that on here it says Form Schedule A. Throughout the 1040 tax form, because it is a summary and each line item can need more details, it will identify what form you may need or where you can go to get more information. In this particular situation, if we're just going to take the standard deduction that is given to us, we then refer to the numbers at the side here on the left. For example, if we are married and we are filing joint with a spouse, it says that we can identify $12,600 as our standard deduction, and that's what we would enter in here on line 40. However, if we feel that our deduction, the standard deduction, is too low for our situation, we can itemize our deductions by using Form Schedule A. Form Schedule A looks like this. It's a form that says itemized deductions at the top, and we can identify specific expenses that we had that will allow us to say whether or not our expenses for the deduction are greater than or less than the standard deduction. So these are the items that we can deduct on the itemized schedule. We can deduct medical expenses, specific types of taxes that we may have paid, such as personal property taxes or real estate taxes. We can deduct certain interests that we may have paid. In particular, this is referring to mortgage interest if we own a home. We can also deduct gifts that we give to charities or other entities such as the Red Cross, the LDS Church, or other charitable organizations. We can also deduct casualty and theft losses, as well as expenses that we have for our job that maybe didn't get reimbursed by our employer. There are also other miscellaneous deductions that we can identify and deduct, but in here you might see where it says see instructions. So you can look at the instructions of the Form 1040 Schedule A, and you can see what other items you can deduct. When you fill out this particular form, at the very bottom, it will tell you what the total amount is that you can itemize to deduct. That number is then carried back over to our 1040 schedule and placed on here, the line item 40. That is if we use the itemized deduction. The next thing that we do after we identify whether we're going to use a standard number that's given or identify specific expenses that we believe could be above the standard deduction, then we do the exemptions. And line 42 is where we identify our exemptions. This is where we take the number of dependents that we have that we identified at the top in our exemptions area. We have totaled them up on the right, and we'll have a number here. We identify that. We then multiply it by a number that is given on the form. In this case, it says 4,000. So if I have 4 exemptions, I would multiply $4,000 by 4 and put that number here. Notice that the standard or itemized deductions and the exemptions are something we subtract from our adjusted gross income. So we are reducing the amount of taxable income that we will have. We then come to our taxable income after we have identified those exemptions and subtracted those. So the next line is our taxable income, and we identify that here on line 43. But we're not done. We're actually only halfway through the return. We still have to multiply our taxable income times a specific tax rate, and we identify that on line 44, which is what our tax is. That would be our tax liability, our gross tax liability. After we do the gross tax liability and identify that, the rest of the form identifies areas that we can still subtract from our tax liability. So our tax credits are items that we can deduct dollar for dollar from our gross tax liability. And we can identify those throughout the rest of the form. For example, there is credit for child and dependent care expenses, or there is a child tax credit. There are other credits that we can earn, such as earned income credit. Okay? And as we identify those, the amount of money that we owe to the government in taxes gets reduced. Then at the very end, what we find is that we have to subtract out the withholdings that that our employer paid for us when they gave us our paycheck. And that is found on line 64, the federal income tax withheld from forms W-2 and 1099. These are the taxes that when your employer gives you your paycheck, that they pay the government your income taxes for you and give you the net amount. So the check you actually receive is after taxes have been paid. Some people will overpay their taxes from their employer, sometimes on accident and sometimes on purpose. There's different reasons to do that. Once we've subtracted everything from our gross tax liability, our tax credits and withholdings from our employer, then we have our tax refund or the taxes that are due. And that is identified down here in the refund area, whether we have overpaid our taxes or not. So that is the basic outline of the Form 1040, which is a summary of our overall taxes. We go throughout a lot of other tax forms as we go through this process, as you saw in the Schedule A for itemizing deductions. So this concludes the video on Form 1040.